Big money just made a bold move, and it could reshape the AI industry as we know it. A massive $1.5 billion stake has just been taken in Hewlett Packard Enterprise by one of the most aggressive activist investors on Wall Street, Elliott Investment Management. What's the big deal? This isn't just about a stock price going up. It's about a serious push into next-gen AI infrastructure. And this might be the signal smart investors have been waiting for. On BizNance Hub, we're breaking down what's really going on, why it matters, and how this could mark a major turning point for both HPE and the AI sector at large. Elliott Investment Management has made headlines after reportedly acquiring a stake worth more than $1.5 billion in Hewlett Packard Enterprise, HPE, as reported by Bloomberg. That places Elliott among HPE's top 5 shareholders, a clear sign they see serious upside potential. Now, while Bloomberg said the exact intentions behind Elliott's move remain unclear, let's be real. Elliott doesn't make silent investments. Their goal? Drive value. And more often than not, that means pushing for changes to boost the stock price. They're not afraid to shake things up to get results. But here's why this really matters. HPE has quietly positioned itself as a serious player in the AI hardware and data center space. Competing alongside giants like Dell and CoreWeave, HPE has evolved far beyond what most remember from the old Hewlett Packard days. Since the company split in 2015, under the leadership of CEO Antonio Neri, HPE has focused its efforts on AI and next-generation infrastructure, and the results are finally showing. What separates HPE from the rest of the pack? Let's talk specifics. First, HPE isn't just selling traditional hardware. They're delivering cutting-edge servers powered by the latest Nvidia processors and advanced optical networking systems. They're not just competing with Dell, they're matching or exceeding them in many areas. Need proof? Elon Musk's AI venture, xAI, recently placed a $1.5 billion order with HPE. That's not a coincidence. HPE has become a go-to supplier for massive AI workloads. They're also sitting on billions of dollars in backlogged orders, signaling strong demand. One of HPE's secret weapons is their leadership in liquid cooling. That might not sound flashy, but in the world of AI data centers, keeping processors cool is a massive challenge. HPE's cooling tech allows servers to be packed more tightly together, boosting performance, reducing costs, and giving them a serious edge over competitors. Their systems are also using copper connections, which, thanks to their cooling tech, can replace more expensive optical solutions in certain configurations. This kind of innovation is why they're being tapped for billion-dollar AI infrastructure builds. Now, if you're wondering how a legacy company like HPE is thriving in such a fast-moving sector, the answer lies in leadership. Antonio Neri has made bold, strategic moves that are now paying off. While HPE's stock recently took a hit, largely due to a temporary transition between Nvidia's older chips and their new Blackwell architecture, this dip looks more like a short-term hiccup than a long-term problem. The transition affected nearly everyone in the space, but HPE was hit harder, perhaps because of lingering perceptions from its past. But make no mistake, this is not the same old HPE. Over the last few years, they've executed exceptionally well and are now positioned to be a major player in the future of AI. One of Neri's most talked about moves is the pending $14 billion acquisition of Juniper Networks. It's a bold bet, and one that could supercharge HPE's AI capabilities. Juniper isn't just a networking company, it's at the cutting edge of AI-driven network management. Their systems can detect and troubleshoot problems automatically, offering solutions in real time. This kind of capability is exactly what modern data centers need. The U.S. Department of Justice is trying to block the deal, citing antitrust concerns, and a trial is set for July. But critics argue the DOJ is off the mark. In the markets where Juniper operates, there's no shortage of competition. Cisco dominates with over 50% market share, and several other companies are active as well. So what does HPE really want from Juniper? It's not about Wi-Fi. It's about tapping into Juniper's AI capabilities, giving HPE another advantage in the rapidly evolving AI infrastructure arms race. Now let's address the elephant in the room. There's been a lot of skepticism lately about whether the AI boom is real or just another hype cycle. Some analysts say Nvidia has peaked. Others argue the AI gold rush might be over. But here's the truth. Corporate spending on AI infrastructure is exploding. Companies across industries are investing heavily in AI not because it's trendy, but because it's productive. We're seeing massive gains in efficiency, performance, and scale across the board. If you're watching this, ask yourself, how can you use AI to change how you work? The productivity boost is real, and we're just scratching the surface. The companies building the tools for this shift, like HPE, are positioned to benefit massively as this transformation accelerates. So here's the bottom line for investors. HPE isn't just back, it's becoming a central figure in the AI era. With Elliott Management now on board, a bold acquisition on the table, and a growing backlog of AI orders, the company is stepping into a whole new chapter. This is the kind of story we love to follow here on BizNance Hub, where tech, finance, and bold strategy collide. If you found this breakdown helpful, make sure to like this video, subscribe to BizNance Hub, and hit the bell so you never miss an update on the biggest financial stories shaping our future.